Hi, this is Joseph. Today is Thursday. It's March 4th. We're trading the New York session. I wanted to post this quick review on some of the trades we've had. This trade right here that you're looking at, this is on the pound dollar. This is obviously a trade to the downside here. And this actually occurred on the Australian dollar and the euro dollar as well. This is just the one that I'm going to focus in on. I'm going to show you the entry was based on the point and figure, the confirmation that we use. I'm going to show you how we pull all of this together. So this is the aftermath. This is the trade. This is the amount of, there's quite a bit of volatility up here at the area of resistance. So it took a little while, but it was at one point it was pretty obvious. And then the rest of the time it was just waiting for confirmation. It was just waiting for confirmation that it was likely to be some kind of final upthrust that would fail. And then the whole thing would reverse and come right back down again. So again, we're going to take a look at the pound dollar. I'm going to show you our setup here, starting with the 30-minute chart. So the 30-minute, the way my trading system works is that we're analyzing bar charts or candlestick charts. You're looking at a bar chart. I prefer bar charts, but candlestick charts work just the same. You've seen some of my videos where I'm actually using candlesticks. Nothing wrong with it. I just prefer bar charts. But the method can be applied with both. So what I'm doing here is I refer to it as counting the waves. And what I'm doing is measuring the waves, the activity, the momentum, and then the volume. So when I'm counting the waves here, what I'm doing is finding a range of consolidation. I just opened this up here so you can't see the, let's go ahead and start back over here. So you can see there's my area of resistance from yesterday. And you can see how price is sort of moving right into that level of resistance. And as I said on that bar chart, it was pretty obvious at one point that it was just a matter of waiting for this upthrust that would eventually fail and then turn around and give us that entry point. So that's exactly what I'm doing here. Again, counting the waves, I'm measuring the wave activity. This is the amount of volume. These are the number of contracts that are traded within this time frame or this period. You've got a 30-minute bar here, another one, 2, 3, 4, 5, 6, 7, 8. Whatever it is, I'm measuring that, and then here's the pullback. Things go sideways a little bit. There's 38, 75 contracts, and then the last three here on this last wave to the upside, we've got 14,342 contracts traded. You can see there's still quite a bit of momentum, but it's not doing anything. It's not going anywhere. It's just a head fake, and it goes through, but ends up closing below. Very, very poor close, right? It's closing below yesterday's high, and then that gives us our signal. That's sort of the footprint, the clue that we're looking for. We're looking for that divergence where we see more momentum and a lot of volume still behind this move to the upside, but it ends up being like a head fake. People that are not aware and don't know how to read the charts, what they're doing is they're seeing price take out a high, and then they immediately just buy and jump in thinking that the trend is going to resume to the upside, and that's not always the case. So if you learn, let me go ahead and tighten this up. If you learn how to analyze the phases of consolidation, so we have phase A, phase B, phase C, phase D, that's what's going to help us determine where we are in relation to consolidation and who's trading at that particular time. You hear me talk about trading with smart money. And when we get into those trades, when you're trading alongside with smart money and you know how to read the chart so you can see when it's likely to make that big accelerated move, what happens is from the time you get into the trade, it usually takes off, and then it's relatively short. It goes straight to these extreme targets. Sometimes you're picking up 50 pips. Sometimes you're picking up 100 pips, maybe even 200 or 250 pips. It really depends on the setup. But we're not scalping here. You're not picking, like 2, 3, 4, 7 pips, 12 pips, something like that. You're going to be earning really big profits. Let me go back to the point and figure, and you can see with the entry of 1.3979, the first target here was 1.3925, and the final target was down here at 1.3884. So that paid a total of 88 pips. I'll review here what we're doing, but 88 pips is not a bad trade. And you can see from the point in time that we got into the trade, you can see just how fast it starts to move. And that happens in almost every instance when we get into a trade with the point and figure. That's what I'll teach you how to do in my coaching course. So in my coaching course, my online trading course, I teach you how to do this. So again, it starts off with analyzing the phases of consolidation and picking a particular time frame on a bar chart or a candlestick chart, and then learning how to read volume. Volume can be pretty tricky if you don't know how to read it. If you're just looking at volume by itself, it can get you into trouble. With point and figure, we're not getting in as price is pretty choppy in here. We're staying away from executing trades in phase B, and then we're waiting for that divergence to take place in the previous chart, looking at the point and figure, and then we get our entry. This was actually a triple bottom entry right here, and then it was a pretty fast move. I mean, it really didn't take that long. So you have two different take profits here. You have two different targets. I always say that you have to have a minimum conservative count based on the data here. So it's based on the way you construct the charts. I'm going to teach you how to construct a point and figure chart so that you're not, so that it'll resemble or mimic, let's say, the time frame that you have available to trade. So in this instance here, I'm trading off of a 30-minute. I'm using this 30-minute bar chart to try to find an entry and to confirm everything and to analyze the phases. And then I'm going back over here to the point and figure. So again, the first count is always the more conservative count. That was at 39.25 for a total of 53 pips. Again, and then we had a second count based on the data, which brought us down here to the 38.84 for a total of 88 pips. I believe the actual low here on one of my MT4 accounts was 1.3880.9. So this is our Apple trade. So this is a 4-hour time frame. It's doing really well. We, again, analyze the phases of consolidation. Is this reaccumulation? Is it distribution? It's very important that you understand these concepts so that you can get into the trade alongside with the smart money. This was very, very similar to what we saw this morning on the pound dollar. You have these up thrusts and these tests. Again, this was a failed up thrust. Ultimately doesn't go anywhere, and then prints this reversal, and then we get this test right here. This occurred in phase C. This is our entry right here. So this was perfect. I mean, you can see we're sitting here just above the 136 area, and price is down here at 119, approximately 120. I think the low today so far has been 118.63. So it's already hit our first two targets, and then we're on our way to a final target, a final count. If it breaks out of this range, we're expecting another move, and then the backing up where it'll retest some of these support levels, and then it'll drop back down. And then for coaching students, if you're watching this video, remember, it's really important. I talk about this all the time. When we see a buying climax or a selling climax, in this case, we're in an uptrend, so it would be a buying climax, and then that automatic reaction, that rally that comes right back down again, that is very important to be able to track, because that tells you that you're on the right path, you're following along, you're tracking, and you're confirming the behavior of smart money, and then you're able to trade alongside with them. So again, the point and figure is what we went to actually get our entry with this test here at the 136 area. Again, coaching students, when you see the buying climax, you see the automatic reaction, leave your horizontal resistance and support lines where they are. Don't make adjustments. And this is what I was referring to just a moment ago when I said, how long can you hold on to these trades? That's one of the biggest challenges that most traders have. They don't know how long they can hold on to some of their trades. So if they're profitable, they want more. Point and figure gives us a count. It's very precise. We'll talk about these trades and a few others from today during our coaching session at 4:30 Eastern Time. If you want to join the coaching program and get access to all this information, the online trading course, the material, 24 hours a day, 7 days a week access, join my coaching program. And I'll work with you to make sure that you understand this. I'll be there to answer your questions. Thanks for watching, and I hope you had a great trading day.